Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum. Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's check what happened overnight. Global stocks continue to climb to new record highs while the US dollar resumed its descent. On Wall Street, renewed expectations of rate cuts spurred investors, driving the S&P 500 and NASDAQ close to their records, with a number of economic indicators supporting the case for the Federal Reserve to lower borrowing costs this year. Bank stocks outperformed after the Fed unveiled a proposal to relax its leverage rules, which would ease the capital that big banks are required to hold against relatively low-risk assets, with JP Morgan and Goldman Sachs hitting new records. Among the Mag 7 stocks, Nvidia extended its recent rally, lifting its market cap to more than $3.8 trillion US dollars, while Meta and Amazon paced the mega techs higher, and Broadcom, Netflix and Palantir also hitting new records. Micron forecast better than expected fourth quarter revenue, but did fall, and the copper miners reflected a jump in the price of the red metal. Freeport, Southern Copper and US listed shares of BHP and Rio up sharply. Well, US first quarter economic growth contracted more than previously reported due to weaker than expected consumer spending. The GDP annualised rate was revised 0.5% lower, with the economy growing at 2.4% rate in the fourth quarter, the weakest since the first quarter of 2022. Domestic demand growth was slashed to 1.9%. And ongoing jobless claims have reached multi-year highs, suggesting potential weakness in the labour market. Meanwhile, FOMC member Susan Collins saying she's expecting one more rate cut this year, but probably not in July, saying we're only going to have really one more month of data before the July meeting. I expect to want to see more information than that. Meanwhile, President Trump, who has been urging the Fed to cut rates faster, is, according to a report in the Wall Street Journal, considering selecting Chair Jerome Powell's replacement in the next few months ahead of the end of his term next May. In his latest attack on the central bank chief, President Trump has called Powell terrible and said he has 3 or 4 people in mind as contenders for the top job. Well, the yield on the benchmark US 10-year Treasury note has fallen more than 4 basis points to 4.25%. The 2-year is around 3.71. And the US dollar has fallen to a 3.5-year low against the euro and sterling in a broad sell-off as traders price in the likelihood that the Fed will cut rates more than previously expected. The Aussie has risen to 65.5 US cents, and Bitcoin is trading around 107,000 US dollars. Oil prices have risen, Brent crude futures up around 0.5% to $68 a barrel. Copper has jumped almost 3% to a 3-month high. Iron ore up close to 1% at $93 a tonne, and gold little changed at $3,330 an ounce. So let's get across what is moving markets with a focus on what's going on Wall Street. Brad Gasworth joining us from Unearthing Opportunities. Brad, welcome back. Good to see you. So as I mentioned there, close to those records with the S&P and NASDAQ. What's actually driving that positive investor sentiment at the moment?
Yeah, that's really the trillion-dollar question here, Andrew. And one with the that ceasefire in the Middle East has certainly helped and restored some confidence in global markets. I think you have the AI trend continuing. We're still in such early innings of the adoption that you're going to see this for the next several years continue to play out. There's a lot of efficiencies that will be driven. It's going to help margin profiles across the board, across companies, and that makes financials better. That makes stocks more attractive.
Where do you want to be in AI-related stocks, Brad? You talk about the AI food chain. Just explain that to us.
Yeah, I mean, you can look across the board from the large providers, Meta and Alphabet, even Amazon's going to be benefiting tremendously. But then if you break that down into the infrastructure, so you have Nvidia on the chip side, you can even peel back that onion and go into the parts that go into the chip. So substrate companies will do quite well. There's a bunch that trade publicly in Japan and Taiwan, Ebiden, Unimicron, Kinsus. Those companies will benefit. But I like a lot of these large platforms like Salesforce.com is executing incredibly well. Adobe's done incredible things with its AI solutions too. But I think it's really the companies that are spending. I forgot, I left off Microsoft on the large cap, which is also doing incredibly well. They're trying to do that renegotiation with OpenAI currently. They're doing incredible things with their host of AI products. And I expect this whole, again, the food chain and, as you mentioned, all to benefit.
Let me just pick you up on a couple of stocks you mentioned there. Salesforce. So I gather that it's saying that AI is doing around 50% of its work.
Yeah, it's quite incredible. Mark made those comments, I think it was earlier today, that 50% of the work is now done by AI at Salesforce. And that's an incredible comment. And it's something that, I think most people believe is going to happen over the coming years. You're going to see a lot of displacement because productivity enhancements are significant with artificial intelligence. And we're still at the first iteration. Wait till we get to some of the larger things. If you get to AGI or ASI, which is artificial general or artificial super intelligence, you have incredible things unlocked, especially with quantum computing. So we're still in the very early innings. We have many years of this growth, and it's going to continue to benefit companies.
Brad, you make the point that Nvidia remains the backbone of that AI build out globally. What are you liking about Nvidia at the moment? Obviously, I just mentioned there, it's clearly the world's most valuable company at the moment, continues to rise in terms of its valuation. That is despite, obviously, its difficulties in China, given those the block it has on those chips.
Yeah, there's all great questions and points, Andrew. I mean, Nvidia has been the darling because they have a significant lead in AI compute. Their semiconductor is really, top of line, best of breed in the market. And because we're in such early innings, this is probably a 5 to 10 year growth cycle for the company. The biggest concern is really, if you look at the trade war with US and China, is the rare earth minerals, which is used to make semiconductors. China has a significant portion of rare earth minerals across the globe. And if they hold that back, that's going to have more of an impact to NVIDIA. But even just the ban of selling NVIDIA chips to China, while it's a multi-billion and tens of billion-dollar hit to the company, they're able to easily offset that with domestic orders and also other orders overseas.
Let's talk about Tesla, Brad. It has debuted its self-driving taxi. What did you make of that? And also, I gather there is news too that they've actually fired their head of manufacturing.
Yeah, the head of manufacturing came out today. That's the abrupt news we got. Not surprised given what we've seen with Tesla over the last several quarters. On the robotaxi side, on the autonomous Tesla, there's actually been some negative press on some of the reports coming back from safety and other issues with their autonomous program. I think there's a possibility in the future maybe they actually partner with Waymo and actually use Waymo to power. That's a wait to be seen. But Tesla, mostly because of the relationship that Musk has had with Trump, has lost a lot of big supporters of purchasers, especially here in North America. There's been, it's a pretty bifurcated market of people that like or dislike our president. And the ones that are on the other side, now are likely not purchasing Teslas. And, even with the feud that Musk had with the president, the damage has already been done. You've seen the company cutting price to spur demand. That's never a good sign for consumer companies. And when you see that, it's a margin issue that's going to continue to trickle down. Now, the company's still executing on other plans, the robots and some of this other autonomy programs are going to be quite significant, but we're years away from those programs hitting revenues.
Brad, in terms of portfolio positioning, you talk about a barbell strategy where you've got AI-related stocks on one side and precious metals on the other. Just explain that rationale to us.
Yeah, I love that. I love that term, and yeah, thank you, Andrew. I've been probably sound like a broken record on this program. I've been talking about precious metals for years on OzBiz, and I continue to believe they're must-own in portfolios, not only from a hedge and a defensive play, but also even if you look at some of the manufacturing and uses, especially silver, there's significant demand. If I look at the AI-related space, I mean, we're in hyper growth. That's not going to really slow down for several years. So you have a nice defensive mix. We've had geopolitical tensions. You also, even in the hedge mode, central governments across the board are increasing their stockpile on gold. So I think it's a great way to have exposure in the markets. I think both asset classes will perform quite well over the next several years. And even if we get more macro or macro related issues that could cause the markets, the precious metal side should certainly outperform.
What sort of percentage of the portfolio are you happy to allocate to precious metals? Bearing in mind too, I guess, where gold has gone. Just lost that momentum, hasn't it? It has been a fairly crowded trade.
Yeah, I mean, it's been crowded for quite some time. And you can also certainly argue that Nvidia and some of these AI-related technology stocks are significantly narrow leadership and crowded as well. But I think you could see, having a 15 to 20% exposure to precious metals might be high, but it's not a bad portion of somebody's portfolio.
All right. Brad, just before you go, I wanted to pick up on, just looking at the latest reading of consumer confidence in the States, the Michigan Index of Consumer Sentiment, coming in one of its worst readings on record for the 2 months in the spring. In fact, down some 29% the first 4 months of 25. And I see that Bloomberg making the point that over the past 80 years, it's a good indicator of what's ahead in terms of the likelihood of recession. Does that concern you?
It's absolutely a concern. I don't like that index specifically. However, it does give a good gauge and read, and it's another input. I've been talking about the caution and concerns I've had on the labor market. I think the U.S. labor market's a lot worse than what's being pictured. That being said, these companies are still going to perform quite well, specifically with financials because of AI benefits. So even with a worse labor market, companies are going to be more profitable and are going to be doing better things, which is going to certainly, in my opinion, keep the stock prices higher. Ultimately, we're going to come down to a pretty bifurcated market. Those that are wealthy and then those that are poor, and AI is going to have a major impact over this in the next decade. But ultimately, I think you're still going to see positive markets for the next several years. I think the consumer confidence is certainly something to pay attention to. But the biggest thing we need to watch going into the end of the year is spend. Are consumers still spending at record levels? I believe they continue to do so. It's been fueled by some of the wealth that's been created either from investments in market or even on the crypto side. There's still a lot of money that's on the table that's still going to invest.
Brad, great to get across what you are seeing stateside. Thanks for joining us from Unearthing Opportunities.
Thanks, Andrew.
Let's refocus on the local market ahead of the open in just a couple of minutes' time. We are expecting a positive start there. SPI futures up 0.6%, and we'll get right across that in just a couple of minutes.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.